Hi guys, welcome back to Compound and Everything. My name is Chris and this is the channel that's dedicated to discussing all things investing, finance and business, helping you build and grow a long-term successful stock market portfolio. In this video, we're going to be analyzing 4 of the largest stocks in the world. I'll give you a brief summary on each of them and then at the end of the video, I'll tell you if I own them or not and why. Now, of course, if you haven't already, feel free to click that subscribe button and the little notification bell next to it so you can stay up to date on all of my latest videos. Anyway, let's get this one started. This video will probably reflect the feelings of many long-term value-based investors right now. I believe that this is probably one of the greatest times to be an investor, however, it's also one of the most difficult. In the past, it may have been slightly easier to find value, but a little harder to find the next big thing, and I guess it's fair to say that right now in 2020, we seem to have the opposite problem. These 4 companies I'm about to show you, in my opinion, have and will continue to lead the way over the next couple of decades and beyond. So to kick things off, we're going to start at number 4 with Alphabet, or more commonly known as Google. Obviously, like with all companies in this video, they really don't need any explanation as to what they do. So let's head right into the fundamentals. Google have been providing an increasing revenue stream to investors for well over a decade now. Alongside that, they have a pretty impressive 16% return on equity averaged over the last 5 years. What really impresses me, however, is the books, sitting on roughly $115 billion in cash and $100 billion in net fixed assets. Although I will cover more of this at the end of the video, it is worth mentioning out of the bunch of these guys, Google are trading closer to book value than their competitors, for whatever that's worth. Like their competitors, Google are firmly focused on the future, however in a slightly different way. They seem to be honing in on more of a hardware sort of direction via Chromebooks and mobile phones. Now, that's not to say they don't have some pretty big futuristic ideas up their sleeve. However, for the most part, they seem to be pushing the agenda sort of more towards hardware and, of course, data retention. I think out of the 4 of these companies, Google would probably rank a little lower on having what most would consider to be a kind of a futuristic sort of plan moving forward right now. In saying that, they already have such a unique foothold on the market, which I don't really see going anywhere anytime soon. And I mean, that's not to say they don't have a secret project that hasn't been announced yet either. Now, that brings us to our next company, the largest listed security in America, which of course is you absolutely smashing that like button. But seriously, I know I say this in every video, you destroying that like button is actually what I believe to be the main reason as to why this channel has grown so fast. So thank you so much for the support to date, and I would very much appreciate it if you continued to smash that like button to help me beat the YouTube algorithm. Anyway, as I was saying, the next company is the largest listed security in the United States, which is Microsoft. First, let's briefly chat about their fundamentals currently, and then we can get into their story and a little bit of the, sort of what they have going on in regards to future plans. Now, when it comes to fundamentals, I'm not overly surprised. As to be expected, Microsoft are running a very tidy ship. They've had constant year-on-year revenue growth for the last 10 years or more, and are providing a very impressive return on equity, which averaged over the last 5 years is roughly 30% per annum. When it comes to cash, they're currently sitting on $137 billion of it, and roughly $61 billion in net fixed assets. Alongside that, they've also done an incredible job in removing all short-term debt over the last couple of years. Now, of course, as a value investor, you can't ignore them trading at 12 times book value and 29 times earnings. However, we will discuss that a little further later in the video. So moving on from the fundamentals, what do I really say about these guys? I mean, you all know what Microsoft does and how they operate. I guess what is most impressive to me about Microsoft has been their ability to keep on growing and innovating over the years. But it's really the future of Microsoft that excites me. They are currently devoting a large amount of their budget to research and development in areas like artificial intelligence, computer vision, and human-computer interaction. These 3 areas will have such a significant impact on the human race over the next 50 years. Now, I know most of us 80s kids probably thought we'd have flying cars by now, but I think the real change comes when we have robotic AI in our day-to-day lives. Things like in-house chefs, cleaners, and property maintenance machines, just to name a select few. What blows my mind here is to think about how many consumers would be willing to spend money if they didn't have to lift a finger at home ever again. And like I said, that really is just the start of it. This alone would make this trillion-dollar company a quadrillion-dollar company, and in my opinion, it's very likely to happen in the next 10 to 50 years. However, enough of Microsoft for now. Coming in at number 3 is Apple. The hardest part about making a video like this is that you guys already know everything there is to know about Apple. Now, very much like Microsoft, these guys are running clean books with a constantly growing revenue stream. But what really is impressive and a little bit mind-boggling is their 5-year average return on equity of 45%. Just think about that for a minute. The second largest company in America is returning 45% equity. There is absolutely no doubt in my mind why Warren Buffett considers this to be one of the greatest companies in the world. Moving on from that, they're also sitting on $94 billion in cash and $175 billion in net fixed assets. However, in saying that, just like Microsoft, they are trading at 17 times book value and 22 times earnings, which once again, we will get back to a little later in the video. When you take a look behind the curtain, Apple's future is much more than just being a phone company. They have plans to create a vehicle that defines transportation in the same way that iPhone defined mobile phones. They're also focusing on creating end-to-end ecosystem of products and services for AR and VR experiences for both consumer and business use. And the other interesting area for Apple is their passion for exploring and improving the health sector. Tim Cook, the Apple CEO, continues to say that health sector innovation will be what Apple is truly remembered for. Like Warren Buffett, I'm very excited to see where Apple goes over the next decade or so. I truly believe this company is very unique. I mean, just their books alone are very, very special. In fact, you probably can't find a company in the world turning over as much money as they are and still turning a decent return on equity like they do. However, now that brings us to number 1, which is hands down my favorite listed company on the planet at this point, which is Amazon. And I mean, I really don't know where to start with this one. There is so much to cover and it just can't all fit into this one video. So I guess we'll kick things off with the fundamentals and then we can go over to why I think these guys are going to dominate the world over the next 20 years. When it comes to income, Bezos has managed to increase revenue streams by over 20% a year since 2014, which in turn resulted in slight profit over the last few years. From that, Amazon had an average return on equity of 15% over the same period, and they're currently sitting on roughly $55 billion cash and $110 billion in net fixed assets. However, one thing to keep in mind is that they are trading at 18 times book value and 74 times earnings, which once again we will discuss a little bit more later in the video, but is staggering nonetheless. Now, when we move on from the fundamentals once again, Amazon's future plans and past growth are almost unprecedented in recent years, starting with acquisitions of common household names like Whole Foods, Twitch, and Audible, which are just to name a few. And all in their own rights were incredible companies to begin with. However, what really excites me about Amazon is not what's behind them, it's what is yet to come. For any of you in the USA watching this video, Amazon has been a name that you've been used to for many years and has probably just become somewhat of a business you've taken for granted, I guess. However, for those of us in other parts of the world like Australia, this is a very new novelty and really does open new doors. I personally haven't used eBay in more than 12 months now. Amazon is just more convenient and much faster. And I mean, in places like Australia and the UK and India, and essentially anywhere outside of America, Amazon is only just getting off the ground. There is still a huge amount of growth to come in these areas. But of course, it doesn't just stop there. Amazon also had plans to create stores that have no staff and are fully automated and cashless. And much like Apple, Amazon are also working on home automation via already existing products like Alexa and products that aren't even on the market yet. Things like AI-powered home robots and companions. They are also working on things like rapid delivery drones and healthcare solutions. As I said, there is just way too much to go over when it comes to Amazon. If you are interested in a video dedicated to this company, let me know in the comment sections below, and if enough of you are interested, I'll put together something going into a lot more detail. Now, remember at the start of this video, I said we'll talk about which one of these companies I own or don't and why. And well, this is where it becomes slightly frustrating as a value investor. I mean, traditionally speaking, all of these companies are trading at a premium that removes any margin of safety for new investors buying in right now. And like I said, when you start considering Google as cheap in comparison to these other three companies, you have to start wondering what's going on. And I mean, of course, I completely understand why these companies are trading at a premium. I mean, they're four of the biggest companies in the world, and they have very realistic plans that will definitely be creating more revenue for years to come. So in saying that, which one of these companies do I own right now? And unfortunately, the answer is none of them. I do firmly believe that reducing your risk as a long-term investor means that you have to enter positions with a margin of safety. This is absolutely critical in my opinion. There are so many investing styles, and I'm not here to disprove any of them. However, I myself cannot buy a company that is trading at 20 or 40 years ahead of its earnings. It leaves absolutely no margin of safety. So I mean, all in all, they are fantastic companies with great management teams, and for the most part, all have solid books and decent owner earnings. They are probably the only four stocks in the world that ever make me second guess my investing style. However, to this point, I've not felt strongly enough to act on that. Of course, I do have 5% of my portfolio that is suited to stocks like these, and if I was to make a choice right now and buy one of these companies, for me, it would probably be Apple or Amazon. So if you guys did enjoy this type of video with me covering American stocks, please let me know in the comment section below, and I'll keep making more videos like this. And of course, if you haven't already, consider pressing that subscribe button and the little notification bell next to it, and feel free to absolutely destroy that like button. Oh, and one more thing before I go. There will be an ad at the end of this video. We got monetized a few hours ago. If you don't press skip on that ad and let it play for 30 seconds, I get paid and it supports the channel. So if you decide to do that, thank you. It would be greatly appreciated. Once again, guys, thank you for watching this video, and I'll see you in the next episode. Cheers.